Hot diggity dog in studio with us, fresh off of his trip to Arizona with a new sun-kissed sunburn. Mr. Brian Johnson of Valley Mortgage, resident expert, heck of a good guy, and always the sharpest dressed guy in town. So, BJ, good morning. How are you?
I'm good, Eric. Thank you.
You
How
bet.
are you?
Very well. You said Arizona was cold.
It was cool, yes.
Okay. Yeah, cold and cool are two different things.
That's true.
And the one day you did get to go out, you just fried your body.
Yep. No sunscreen. Yeah, we just tried to bring home the sun with us, I think. So.
Great choice. You
Right.
are glowing right now, BJ. I told people at the top of the hour, and I want to talk about it now, is that we've seen a shift, a hike, a jump in interest rates, and I think people are starting to freak out a little bit. Can you talk us off a ledge?
Sure. Interest rates have gone up quite a bit, probably about 0.5%.
From what to what, roughly? I mean,
at the end of the year, November, December, I think 30-year fixed rates were probably around 3.75 to 4%, depending on your credit. And right now they're ranging between 4.25 to 4.5.
Okay.
Still, historically speaking, that's very low. We've had, I think, 6 or 7 years of falling rates, and things are starting to tick back up. I won't get into too many technical details, but the Fed has started to see that the economy is turning around, that people are starting to spend money. So they're looking at raising the short-term interest rates, which then has a long-term effect on long-term interest rates, 30-year fixed rates and everything like that. You've seen the stock market go up too. So people are pulling money out of the safer assets, mortgage-backed securities and bonds and things like that, which is causing interest rates to go up slightly. I'd kind of think things are going to level off here at some point. Typically, there's a knee-jerk reaction when the Fed starts opening their mouth, and things tick up a lot quicker than they tend to fall. So,
do you think we're going to see a resettling here a little bit, or are we going to stay at this 4.25 to 4.5?
Oh, I think we're going to be in this range. They could probably go a little bit higher too. I think things will cool off a little bit, but I would imagine things will be in the 4.25 to 4.5 range here for the next few months. You could see some data come out that made things go down a little bit, but I think for the most part, we're probably in this range for a while.
The national average of interest rates is not where we're at now, is it? I mean, over the historical time since they've been tracking the data,
right.
Isn't it more like 6%? That's the national average?
Yeah, I thought it was a little higher than that, actually, 7 to 8% on average.
Okay.
Maybe it's closer to the high 6 range now that we've had so many years of 3 to 4% interest rates. So that's probably brought that down a little bit. But, not that many years ago, we were actually higher than this for interest rates, and people forget that. If we look at
when was it? When you say not that many years ago, are you talking about like the 80s?
No, 2000.
Going back to our glory days when we had full heads of hair.
You're right. Yeah. As a kid.
That's right. This is the last time for us. Yeah, it was great.
If you look at 2009 to 2011, even into 2012, interest rates were in the high 4s, low 5% range. So it's not that many years ago that we were even higher than we're at right now.
That seems like yesterday, and yet I'll be honest, BJ, is I am in my head saying we've been at 3 and 3.5 and 3.25% for forever. It feels like, but that's, you said 2009 to 2011 and 12. We were still at 5 and 4.5.
Right, we were. We saw things really fall. 2000. What was that? Late 2013 is when things dipped down almost a whole percent that year. So we were down to 3.25 at one point for a 30-year fixed. I think one day we may have hit 3% for a 30-year fixed.
Why didn't you call me on that day so I could refinance, Brian Johnson? Oh, you and I are going to have some fisticuffs off of this show.
Yeah. But things have gone up quite significantly since basically October, November of 2016. So we've seen interest rates jump about 1.5 points and since then. But the economy has really come around too. So if you look at job growth and local economy here, things are strong. So the market can handle a little bit higher interest rates.
So it's such a conflict. And again, those of you tuning in, Brian Johnson of Valley Mortgage, and we're talking about rising interest rates right now. BJ, it feels like a conflict because as things get better, as markets get stronger, now interest rates start to rise. Like, doesn't that just tick people off?
It does. For those of people that have owned for the last 3 to 5 years, they've had pretty good equity building too. So you probably have some decent equity. You might be able to get rid of mortgage insurance if you're going to look at moving up. Even though interest rate might be a little bit higher, you should have some equity to be able to put down for a new house. So that really should help your monthly budget as a whole if you're looking at some options in either moving up or consolidating debt or something like that. So
But we're coming off of historically low interest rates, right?
Mm-hmm.
Like we never had the history of this country seen interest rates stay under 4% for that length of time. And you saw everybody and their uncle refinance their house, right?
Because we had quite a few of those. Yeah, everybody was chomping at the bit to get those rates.
And interest rates were cut down to such a low rate because the market was intentionally trying to be stimulated, right?
Mm-hmm.
They were trying to motivate people to say it's not expensive.
Right. They're
Yes?
trying to get the economy moving.
Yeah,
and,
yeah.
And the housing industry is the largest industry in the country, right? So that takes into account home builders, craftsmen, mortgage people, real estate agents. I mean, there's such amount tied to the real estate market that was the easiest way to kind of get the economy going again. So the Fed came in and started buying all these bonds and mortgage-backed securities, and now they're trying to offload that and kind of get the economy to start rolling on its own, which in order to do that, interest rates start to rise.
So are you going to find, Brian, that a lot of people aren't going to be able to qualify for a loan now because of these interest rates? Because you're in the mortgage lending business, owner of Valley Mortgage, and is this going to eliminate maybe the bottom tier of people that could have bought last year but can't now?
I don't think so. I think there's actually a shift in some of the mortgage underwriting guidelines that are loosening a little bit that will allow people to qualify for a mortgage. Things kind of got out of hand in the mid-2000s, as you recall, where as long as you had a credit score or maybe no credit score,
And
you
a
could get a
pulse,
mortgage,
yeah.
right? Yeah, no blood test or anything like that needed. But then it kind of took a shift, and you needed to have so much documentation. Well, that started to lift now as we get back to kind of more responsible lending. And as long as you can qualify with the payments and show that you've got some down payment or maybe not even needing down payment, you can get qualified for a mortgage. There's other programs out there that I think are really helpful for affordable home buying and helping people get into those.
So there are still options. There's still opportunities. I want to talk for the last moment here about the people that are selling their house, because we find that most people who are selling are also buyers. And so we can talk to both audiences at the same time.
Right.
If you are selling your house, what advice would you give somebody right now, Brian, in terms of if they're thinking about making a move up, what steps should they be taking?
Sure. Give us a call. Let's take a look at what your situation is like so we can kind of quickly evaluate how much you have in equity, maybe what your next budget would be. Take a looking at maybe consolidating some debt, paying off some debt with selling, and then what you'd be qualified for on the next house. So that's a pretty quick conversation that we can have over the phone or meet in person to kind of go over some of those options.
And I would say whether it's a mortgage professional or a real estate professional, you got to start figuring out what kind of opportunities are there for you, because maybe now is not the right time to move financially. Maybe it is the right time to move financially, but we never know until we talk. And it doesn't cost anything to talk to beautiful men like us.
That's right. Yeah, we're happy to help people out and make sure you're making the right choices.
So, BJ, if anybody wants to get a hold of you at Valley Mortgage, what do they do?
Sure. Stop by and see us at 3315 45th Street South, or give us a call at 701-461-8450.
Brian Johnson, thank you so much for always tickling our ears with more knowledge than I could spit out myself. Folks, at the break, I want you to head to livefargomoorhead.com, take a look and see what's happening on the real estate market. This is Real Estate Radio with Erik Hatch.